Good afternoon. You're watching Your Stocks here on CNBC-TV18 in the Mumbai studios. I'm Parthiv Shah. We are here to answer all your queries with regards to every stock that you own. But the Nifty is now nearing that congestion zone of 24,350 as we speak. At the highest point of the day at one point of time was 24,340. Yesterday's high was 24,343. And of course, Monday's high was 24,351. So that is that congestion zone that the Nifty needs to cross. And there you can see again slightly off the highs of the day the moment it touched that level of 24,350. We'll keep an eye out on the final few minutes of the trading session. It's the Nifty Bank monthly expiry today, mind you, so the indices will remain in focus. But joining us today are Parthiv Shah, director at Tracom Stock Brokers, and Soni Patnaik of JM Financial to answer all your queries. Parthiv, Soni, thank you so much for joining in. Good afternoon to both of you all. We'll start off with Ram Kumar, who is writing to us from Hyderabad, and he's having around 1,500 shares of Aditya Birla Capital at 226. Whether he wants to know whether he should hold on or he should book losses. Now, Soni, the stock has been an underperformer in the last 1 month or so, but has moved a bit in the last 5 sessions, around 6.5%, well below its 52-week high and well below this gentleman's buying price as well. What are the charts indicating? Does this warrant a move back towards 226?
Good afternoon, Harmas. Thank you for having me on the show. So I think the stock has corrected quite a lot, and there's a possibility that 180 is the temporary bottom out that one can see. So the advice would be here to average out at current price and hold with the revised stop loss of 180. Of course, it cannot move in the next one series or so, but rollovers have started taking place on a decent side. So there's a possibility that over the next 3 to 6 months, on a positional basis, one can see it heading higher towards 240. So one can average it out and keep a trailing stop loss of 180 from current levels.
Heading towards 240. Parthiv, what about you? Not one of the most spoken about NBFCs, but what's your call here on Aditya Birla Capital?
Good afternoon, Soni and our viewers. Yes, you rightly mentioned the reason why it's not much spoken about is because ever since the demerger, I think Aditya Birla Capital has destroyed a lot of shareholders' wealth. I recollect it had demerged somewhere around at a price of around $250. And it's been almost like 10 years and it's not created any value. And luckily from the lows, the stock has started reacting positively. The only reason being that I think there's been a change in the management guard, especially for the NBFC business, which houses a book of around 1,15,000 crore. And now they're working on more secure assets in that book, which is, I think, helping the confidence for the street. And also the subsidiaries like ABSL, the mutual fund business, I think is doing reasonably well. Over there, also the value unlocking is taking place. Plus the health insurance business has grown the premiums by 39%. The life insurance also, the premiums have grown by 33%. So overall, I think the company is doing reasonably well. The management is guided for next 2 years of compounded growth of around 25% in their NBFC book. So if they can deliver these numbers with the quality of asset being maintained, I think this company can test levels of 230, 250, which will be around 1.3 times price to book multiple. So that is where probably the gentleman can think of exiting this stock.
240, 250 is where you can consider exiting the stock, but some patience warranted here on Aditya Birla Capital. Moving on then, Navendu Sharma is writing to us from Ahmedabad, and he has 100 shares of Quest Corp, which he purchased around 700 rupees a share. And he wants to know the short to medium term prospects of this stock. And along with that, he also has 50 shares of Wonderla Holidays, which he purchased at 805. And he wants to know whether he can buy more. The Parthiv, two completely different names. Quest Corp is a stock that has done well so far this year. There has been a lot of chatter around this stock as well. And on the other side, Wonderla has been an underperformer. But for the gentleman in question, he's still in the money when it comes to his positions here. What would you advise among the two? Which is a better recommendation, and if there is a better option compared to the other two?
So firstly, talking about Quest Corp, I think it's one of India's leading business service provider, having the expertise in staffing and digital platforms to drive that. But somehow I think this company has performed quite lacklusterly, and it's not really delivered good shareholder returns on a consistent basis. Though I think in terms of pedigree, it has huge capacity in HR staffing, and it's one of the top 50 globally. And also knowing the fact that Fairfax owns a stake in it. But I would probably avoid this counter. I think this space is a little difficult. A few listed players here, but I think this space is difficult where a lot of value for shareholders can be created. Talking about Wonderla, I think Wonderla looks interesting. We know, I think it's a quality bet in terms of the amusement parks. They already have parks in Bangalore, Hyderabad, Bhubaneswar, Kochi, and now they are looking to expand their footprint in many other geographies in the country. And they are, I think, one of the finest capital allocators because most of the amusement park rides, I think they build it in-house, so the return on capital employed is pretty good, and they can have decent control over their cost, operations, and maintenance. And valuation wise, I think it's quoting it around 30 times forward, which is not necessarily cheap. The stock has had a decent run from its lows. I would suggest, I think the stock could consolidate for some time here, but I think going ahead for the next 2 to 3 years, the outlook for amusement parks in the country looks better.
Indeed, the outlook for amusement parks looks better over the next 2 to 3 years, especially considering the amount of travel that people do during the holidays. But Soni, what are the charts indicating here? Does Wonderla have the potential to create wonders on the charts, or Quest Corp is a better one here?
So, Harmas, both the charts are quite interesting for a short-term perspective. If you look at Wonderla, it has a good support and it's just bouncing from the 800 mark. So, if one has to hold, the risk-reward ratio is quite favorable because 800 becomes his support. There's a possibility that the stock may consolidate for a month or so, but it can move the moment it crosses 870 or so. You can see it heading higher towards 950 to 980, and that could happen in the next 3 months or so. So, I think it would be wise to just hold with the 800 stop loss. If we talk about Quest Corp, for a short-term trading perspective, on weekly charts, we can see it has a good reversal pattern showing from current levels. And there's a strong support of 650. So one can hold Quest Corp for a short-term trading perspective and look for targets of 750 to 780 in a month.
Among the top movers of the day is Quest Corp, 6.5% higher today on strong volumes as well. Moving on then, Wesley is writing to us from Chennai and he wants to know the long-term view of around 3 years on South Indian Bank. Now, even this stock hasn't done much in the recent past, but Soni, what do the long-term charts here of South Indian Bank indicate?
Harmas, it's a bit difficult. It has not shown any strength or signs of reversal as of now. 22 is a very crucial support. Now, if that breaks, it can head lower towards 18. Ideally, one should look at an exit if it breaks 22, and that's the level to watch out for. Reversal can only happen if it's able to cross bare minimum of 24.9. That's the level to watch out for. If it crosses, then only we can say that there can be some reversal towards 28 odd levels. However, 22 stop loss should be maintained, and if it breaks, one may exit from the stock.
Right. You know, Parthiv, there are plenty of options within the private sector banking space, right? You're spoiled for choice when it comes to picking out, and there has been a lot of consensus about banking valuations being cheap as well. Is there a better alternative to South Indian Bank? But what do you advise this gentleman for his existing positions here?
Surprisingly, Ormas, I think in the entire banking pack, historically we have not seen this, but currently even cheaper than the public sector banks are the regional private sector banks, names like Karnataka Bank, City Union Bank, and even South Indian Bank. And it's not that, they've done really bad in terms of the slippages and the asset quality. I think they have also shown signs of improvement, but somehow market has not taken any cognizance of this improvement. And these stocks have stayed cheaper because they've been growing their balance sheet to the tune of 10 to 12%, which is pretty healthy in such a scenario. No doubt, I think the liability franchising growth has been challenged for most of these players, and market always worries about the NIM compression because of the higher rate of deposits that they have to offer. But our sense is out of this pack, I think we prefer Karnataka Bank. It's extremely well run and they've cleaned up the book extremely well. The return ratios going ahead could be even attractive. And valuation wise, it's one of the cheapest in the pack. So I would prefer Karnataka Bank in all the three.
Karnataka Bank among the regional private lenders is Parthiv's recommendation. Moving on then, Karan Krishnamurthy is writing to us from Bengaluru and he has 20 shares of JSW Steel which he purchased at 850 rupees. Now he wants to know whether he should hold or he should book his profits. He's very much in the money is Parthiv. JSW Steel over a 5-year time horizon has done very well. The stock has more than tripled, but over the last 12 months or even this year the stock hasn't done much. So what is your view, especially considering the upcoming volatility that you expect from China with Trump and all these cues coming in from the metals basket? What's your view here on JSW Steel?
I think a stock like JSW Steel can do justice to one's portfolio only over a 3 to 5 year horizon. And as you rightly pointed out, in the last 5 years, the stock has almost tripled investors' wealth. And going ahead, I think over the next 5 to 7 years, if not 5, but at least in 7 years, it's easy to pencil in that this stock will at least, I think, triple from here. One of the key reasons why I'm saying this is because I think we know that JSW Steel is a very fine capital allocator. Their conversion costs are one of the lowest in the industry, despite them not having entire backward integration of iron ore and coking coal. And this is a company which is almost doubling its capacity by 2030, 2031. And the quality of new fixed assets that they're building in are, I think, one of the best in the country. So there is a lot of hope that, India's domestic steel demand will grow. And if we were to multiply to the GDP to a multiplying factor of 1.2 times, I think then also we don't have so much of capacity on stream. A lot of big players have announced capacity, but I think JSW Steel over the longer horizon can further create value from here. But it'll take some time, 3 to 5 years at least.
What about the chart, Soni? Some key levels that one should keep an eye out on?
So Harmas, if the gentleman is already in good profits, can at least trail the stop loss to around 940. Now it is consolidating. It's in a sideways range, and the upside range that can be seen is 980. So the moment it crosses 980, it can head higher towards 1020 to 1040. And that's the level one can watch out for JSW Steel to book the profits. So since he's already in profit, the advice would be to trail stop loss to 940 and hold the stock and look for higher targets towards 1020 to book the profits.
Look for higher targets towards 1020 to book profits. Parthiv, Soni, stay on. There's plenty of more queries to answer, but we'll take a short break and we continue with our queries on the other side. Stay tuned. Welcome back to Your Stocks. Parthiv and Soni are still with us to answer your queries, and we move on to the next one. That is from Shashank, who's writing from Hyderabad, and he has 1,000 shares of IDFC First Bank, which he purchased at 59 rupees. Now he wants to know the outlook on the stock. Now, Parthiv, there has been so much chatter about IDFC First Bank, some of them calling it the next HDFC Bank, and so on and so forth. But what is your call on the stock? Will it possibly deliver the kind of expectations that the street has from the stock?
Frankly, one disappointment in the last quarter was, when one thought that IDFC's book is panning out to be extremely good, and now there are no legacy issues in the book. They did report significant provisions regarding the microfinance book, which I think definitely took a toll in terms of the sentiment, and the stock did correct from its high levels. No doubt, I think in terms of the core liability franchise, they're doing reasonably well. The deposit growth has been pretty mind-boggling, around at 32%, which is contrary to a lot of their other industry peers who have been struggling to garner major deposits. Even the retail deposits have been almost 37% in terms of growth. So CASA has been extremely strong for this bank. And in terms of loan disbursement, the new loans that they're doing, they generate pretty decent yield on advances, and the loan book has also been growing at a healthy 20% compounded, which is now sitting at around 2.2 lakh crores. So there is a lot of value, no doubt, but it is just, I think, these skirmishes that the bank delivers in terms of higher provisioning that kind of spooks the market. At current levels and current valuations, I think there's no harm holding on to it. We do believe that, over the next few quarters, as and when the asset quality improves, I think the markets will take cognizance of it and the stock would reach higher levels.
What about you, Soni? On the charts, the stock has been down over the last month. It's been an underperformer this year as well. Do you see a reversal in the offing as we head into the new year?
So Harmas, if we have to get any sort of a reversal confirmation, it can be above a 67 sort of a level. So one can actually hold, but then the stop loss has to be at 62, and that's a very strict stop loss. There's a possibility of the entire sector showing some strong momentum in the upcoming series, and there could be a possibility that this stock also can move past its resistance of 67. So hold with the stop loss of 62, and the moment it crosses 67, you can see the levels of 70, 72, and that's where one can book profits.
Strict stop loss of 62 is Soni's recommendation on IDFC First Bank. Moving on, then Muni Rajulu is writing to us from Telangana, and he wants to know the entry level for Trent for a 3 to 5 year horizon, and he wants to also know the entry levels for transformers and rectifiers for the same period. Now, Parthiv, we were just speaking about this stock a few hours ago on halftime report that the stock has recovered every post earnings loss that it had made of around 6,900 is where it was when the earnings were reported. It fell and now it's recovered all of them. So if somebody who wanted to buy the dip, have they missed the bus already, or is there still an opportunity considering the peak is still well above 8,300?
See, luckily, I think the investor is talking of a 5-year view. So with the 5-year view and growth, the way Trent has been delivering, we can always kind of justify the current valuations. Nonetheless, I think just to give you some stats, I think since FY20 onwards, I think Trent in terms of its market cap has grown at a staggering 72% compounded. And if I look into the revenue growth, that has been at a very good, healthy 39% compounded. And same is the case of the profit growth. But I think if you see, the fundamentals have certainly moved a lot ahead of the earnings growth. And that is the key reason where I think there's a lot of pressure in terms of Trend to deliver such stable results quarter on quarter. Even a single quarter miss, I think, would hurt or derate the valuations by at least to the tune of 15 to 20%, which kind of we saw recently. Yes, I think there'll be opportunities in terms of better entry points, but the gentleman has a 5-year view. I don't see that over the next 5 years, similar 72% compounded sort of returns will be made, because a lot of PE re-rating, everything has taken place. But this is a company from here can deliver 15 to 20% sort of a market cap growth over the next 5 years.
Indeed. What about you, Soni? Has Trent made a bottom for now, at least on the charts? What are the charts indicating? Is this a good entry point? And if you could also share levels for transformers and rectifiers.
Certainly, Hormas. I think, yes, temporarily speaking, Trent has seen a triple bottom formation around 6,200 base. The whole of November series, it was sort of after the correction, it was consolidating. That's a very strong bottom that one can see on a short-term perspective. This can be the good entry point because it has just given a breakout above that consolidation range. So the stock, the levels one can watch out for in Trent on immediate basis is 7,000, 7,050. And there's a possibility that the next upcoming series, one can see it actually heading back towards the levels of 7,700 to 8,000 level. So it's a good entry point, and one can accumulate on small declines up to 6,500 as well. The stop loss support to be followed for Trent would be 6,200. If we talk about transformers, transformers actually has a resistance of 1,040, and that seems to be a bit of a difficult resistance to actually break. I think the entry point ideally should be on a decline towards 930 to 900. That range is the level where one can initiate a long sort of a strategy. And there's a good support of 840. So I think that's the level. Just wait for the dip to happen and enter on lows of 930 to 900 range.
Usually stocks make double bottoms, but Trent is known for defying expectations and everything. So it's made a triple bottom according to Soni. But Parthiv, Soni, thanks a lot for sparing time joining us this afternoon to answer our viewer queries. And with that, it's time on this edition of Your Stocks. But do remember to email us your queries and we will address them with our experts. Closing bell up next to take you through the final hour of the Nifty Bank monthly expiry.